Hi, everyone. Welcome to today's session. We're so pleased to have you here to our session focused on whether or not business models of fintechs can close the gender gap. I think we're being asked to just go ahead and start. Usually I see if we have everyone here and if we might need a few more minutes for everyone to join, but the system is a little bit different here. So welcome. My name is Nandini Harihareshwara. I am the gender lead focal point for UNCDF's Inclusive Digital Economies Division. And it's my pleasure today to be your moderator along with my esteemed colleagues who will be introducing themselves in a minute. Very quickly, kind of introduction to this session. The past decade has been one of progress in digital financial inclusion, where mobile phones and internet access are changing how people in LDCs access and use services in a variety of sectors. However, with this acceleration of the use of digital technologies during COVID-19 pandemic, that technology gap where it already exists for marginalized populations and communities, especially between men and women, can actually be both a boon and something that can be quite detracting. So solutions developed by fintechs are often helping women in a variety of stages, and we'll hear from them in our partners. Some women perhaps do not have access to collateral, and so fintechs and digital technology is allowing them to have access to credit despite them not having access to collateral. Some women aren't necessarily literate, so how do they access financial services? Some of our colleagues will speak to that. So in partnership with other financial institutions in countries that we'll talk about today, many fintechs are exploring how a combination of different kinds of applications tailored to women's needs and women's entrepreneurs' needs can actually build a business case to serve these kinds of populations. I'm also pleased to share a publication that UNCDF has also helped to co-author. It's called the IDE, Inclusive Digital Economies for the SDGs, Sustainable Development Goals. And in it, we talk a little bit about some of the opportunities that my colleagues today will be talking about. So we'll drop it in the chat in a few minutes. So with that, let me first introduce the poll. We have a poll to just get everyone thinking a little bit on what help us direct the conversation of all of the wonderful speakers you see on the screen today. And the question is a simple one. It's a yes or no question. I wanted to keep it simple, but for something for everyone to think about. And the question is technology actually worsening the gender gap? And so that's the question. It's a yes or no question. I'll ask my colleagues from CFI to go ahead and activate the poll. And I think in a unique set of circumstances, our audience members will see the poll and the voting, and we'll have to wait a minute or so to see what the results of that poll looks like. So we'll just wait. I'll put my timer on for about a minute. Our colleague from CFI is sharing, and I'm sharing this with our speakers, that 75% have said yes, it is worsening the gender gap. 25% are saying no. We've got about 20. If anybody needs more time, please let us know or let our moderators know from CFI. But I think we've got about 15 more seconds on the clock to either vote yes or no. Is technology worsening the gender gap? Click on live discussion to see. You can click on live discussion to see, our colleague from CFI is saying. I don't see that link for me. That's okay. And Lauren's saying now, our colleague from CFI, the vote has changed to 55% yes, technology is worsening the gender gap, and 45% no. It's starting to get close there. Vijay, you're one of the inspirations for this this question, because I know this is something that you talked a little bit about in our preparation call. Okay, the poll is closed, and the final result is what, Lauren? Do you want to share the final result with us? Same as the last one. So it's 55% yes, 45% no. Okay, let's keep that in mind as we have our discussion today around what, what kinds of solutions that we're talking about today. So what we have asked each of the speakers you see here is to briefly introduce themselves and give a 3-minute summary of their business model, how it addresses a challenge, for what the challenge is for women, what the underlying barrier is there, and how the solution that they are representing today actually addresses that challenge. So that's what they'll be sharing with us today. So maybe I'll ask Sakshi to start us off. Is that okay?
Sure. Thank you. Thank you so much, Nandini. Quite excited to be here. Hello, everybody. It's a pleasure to be here, and my name is Sakshi Chadda, and I work with UNCDF as a digital expert for Bangladesh in the Inclusive Digital Economies team, and I'm responsible for our projects under the ID portfolio in Bangladesh. I think before I get to answering one of the business organization portfolio company that we're working with, I wanted to do some sort of a background setting specific to Bangladesh. In Bangladesh, there are about 43% women who participate in the labor force, and this number stands at about 83% for men. These numbers might be a bit dated, obviously not super recent, but whatever latest info is available in the market, you see, getting sex disaggregated data is also a challenge in itself. Moving on, there are about 48% women who own mobile phones, while this number stands at about 79% for men. If I look at the financial inclusion, the FI numbers, adult male account ownership, as per the Fintechs last numbers were about 65%. That stood at 36% for women. So there's definitely a bit of disparity, and this essentially comes from or stems from the fact that culturally, socio-cultural norms, socio-economic conditions, a lack of infrastructural access, such as mobile phone ownership, etc. So these inherent conditions, especially coming from the cultural norms, have sort of always women in Bangladesh have never really been able to that actively participate in the workforce, or take charge, for that matter. But that's definitely changing, which is great, and it's also equally inspiring for us to be working with some such partners in the country. So looking at a gender portfolio in the organization we wanted to highlight, so we are working with partners such as Romoni. They have set up an online platform wherein you could have beautician services, or such services being made available to you, and this is obviously for 100% women, and they've, through our support, they've been able to reach about around 350 plus women, making sure that they earn a lot more, almost 2 to 2.5 times than what they used to earlier. We're working with partners such as Bank and CVC, quite early stages, but I wanted to drop in their names and in a line or two talk about what's there to watch for. With both these organizations, we're looking to basically build tech products. One of them is about creating an e-commerce platform, especially focusing on small women entrepreneurs, providing them services such as logistics, providing them services such as digital presence. And with CVC, it's more around inventory financing for micro merchants, trying to bring in more women. But the one that we would definitely focus a lot more in this discussion is with iFarmer. So iFarmer is basically a digital platform, an online digital platform, which basically looks at supporting farmers by sort of looking at different legs of how, agri businesses profits could be maximized. They work with the farmers, they work with the funders, they work with agriculture companies and buyers, and we had supported them in Q4 2019, largely to build two digital products. So build their digital presence, focusing on one targeted to farmers, which is called the Shuffle app, and one of those basically targeted to the investors. What they essentially do is that, retail investors who are looking to spend some extra money, or who have interest to spend or finance agriculture activities directly to farmers, but don't know the modes, don't know the means. So iFarmer is your platform to sort of consider. And at our work with them, or the project that we sort of sponsored, largely focused on women. And they sort of provide a holistic solution. So this was not just providing a financing solution, a sponsorship of sort of small chunk amount solution to the to the direct farmers, smallholder farmers, or women who haven't been exposed so much and need a lot of pushing, but also providing them input to be able to do well in this business, providing them with market linkages, and at the same time non-collateralized financing. So it's like a multifaceted holistic solution that they're working on, and we are quite proud to
Sakshi,
sort
you're over time. So
of.
maybe I'll just
uh,
ask you to wrap up in the next 10 or 15 seconds.
Absolutely, that works. So I think this is the one that we'll talk a lot more about, Nandini, maybe as we proceed in the discussion. Thank you.
Kwaku, let's move over to you and share with us the solution you'd like to share with us.
Okay, thank you very much, Nandini. I'm equally excited to be present to share our model here at Sinapi. So, as Nandini mentioned, my name is Kwekwe Champon. I work with Snappy Aba Savings and Loans in Ghana. Snappy Aba is an implementing partner of Fortune International Network. And over the past 27 years, Snappy has provided both financial and other value-added services actually to our entrepreneurs who are mainly in the low-income bracket. So the key agenda is to catalyze, personal transformation, empower these customers to actually act upon the economic opportunities that they find themselves in. A good majority of our customer base actually is women. So to the model that I want to talk about this morning, basically it was, if I should say, an initiative actually to close the gender gap. So just prior to the pandemic hit, Snappy had actually introduced a cell phone banking service, and this, which was actually going to allow customers to access the bank. And in fact, for the first time, customers are going to get access to the bank without an intermediary or a staff person supporting them. So we all know the sort of challenges that has to do with, asking low-income customer segments to actually adapt to digital. Added to this particular, all these challenges, we had very little time because of obvious reasons. The pandemic hit, very little time to do in-person trainings and other client engagements. So Snappy resorted to actually use an IVR platform. The key objective was to help customers actually to learn or educate them on how to use this cell phone banking services. And also because it was COVID, Snappy sought to provide some care and support to our clientele base through the messaging that we were going to actually offer the customers. We realized that, yes, it did provide a very good opportunity to clients to hear some education and training on this cell phone banking service that I'm talking about. And again, we did try to carve out the content of messaging actually to suit the customer needs, especially the women customers that we did serve. So we did have them at the back of our mind right from the beginning in designing the messaging that we wanted to go out. The style and the tonation was such that it sounded as though it was one of the customers that we were dealing with. Further also, we did also make sure that the messaging was designed to be in several dialects so that customers could actually pick from their preferred language and understand better the message that we wanted to actually put across. So we rolled out this service to about 88,000, I think close to about 89,000 customers. 10,000 of them approximately had registered for the service, 77,000 hadn't. So if let me go just a little detail to share some results from the survey. So we did realize that there was.
Sorry to interrupt. You've got about 30 seconds left.
Okay, let me just wrap up. So there was some very good behavioral change. About 17% of these clients signed up just because of this particular intervention that we had put in, and a good majority, 58% of these were actually women. And again, we saw a transaction increase, about 42% of these customers increasing their transactions because of this particular initiative, of which 46% were also women. Thank you very much.
Thank you so much. And we will learn more, I promise, about all of these, but we wanted to give everyone a snapshot of why we've invited these amazing speakers from Bangladesh, from Ghana, and from other places to speak to us about their solutions. Vijay, let me ask you to go next.
Thank you, Nandini. My name is Vijay. I'm co-founder and CEO of Ekgaon. At the same time, I'm working with Opportunity International's portfolio of organizations they have invested in India. And one of them is CDOT, about whose case study I'll be sharing here. What we are essentially working on for last 4 years has been a series of focused intervention around including inclusive finance for women. That's what our focus has been. So we have worked on two levels in this. Level one was we found that most of the agents that banking correspondent they're called agents that are there in the banking system, business correspondents they are called, were male. Almost 90, 98, 99% of them were male. And the interesting part, what we saw is that of 95% customers of these agents were men. And the reason was very simple that women found it inconvenient to go to these outlets which are only run by men. So we focused our intervention. First intervention was focused at getting more women as BC agents. That started about 2 years back, and now I'm happy to say that of the CDOT's our partner CDOT, we have now 35% agents as women. These are and the most interesting part which we found through an evaluation study we did is that of these women, for more than 50-55% customers are now women at these agents, which is something what we wanted. We wanted a change in the behavior of a customer to seek financial services access, and if they were comfortable with women being an agent, then that is what we wanted to provide them. Our second work around this sector, which is focused on largely focused on getting financial literacy to the women and to the mid management cadre of the financial service providers. What was most important, and we use digital platform for delivering these training programs where we train women entrepreneurs on one hand to become financial service providers. That is a training which a digital training program that we launched, and it is going on. The second was to get the financial services middle management women to become more active part, have a more active say and play in the digital strategy of the organization. So this is something what we have done over a period of last 3 years, with the focus that we want gender to be inclusive in provision of the financial services. Nandini.
Thank you, Vijay. Perfect. It's right on time. Thank you so much. And now it's my pleasure to invite our colleague Megan McCormick to talk a little bit about the solution she's helped to develop in Ghana.
Hi, good afternoon, everyone. It's great to be here. Apologies for keeping my video off. I'm having some connectivity issues. As Nandini mentioned, my name is Megan McCormick. I'm the co-founder and CEO of Oze, which is a fintech company based in Accra, Ghana, serving customers across West Africa. What we do at Ozai is we help micro, small, and medium enterprises make better business decisions that they can use to improve their performance and also access capital. I've been working with these small business owners for almost a decade now. And what we found was that the business owner itself doesn't have the tool that they need to actually understand their performance, make the right decisions, make profit maximizing decisions. So, what we've created is a digital ledger book that focuses on helping the entrepreneur form the habit around record keeping. So, they enter in their sales, their expenses, they can issue digital receipts, and also through this application, we provide them with business education, whether that's a daily business tip, an invitation to a business seminar, or access to an actual on demand Ozai guru or an Ozai business coach. When we started this intervention in Ghana, we learned that 97% of business owners who use Ozai are growing, profitable, or both. And so when you have this cohort of digitally enabled, diligent entrepreneurs, they become very good candidates to access capital from financial institutions. So that started us down the second path, which is how do we now create the bridges between formal financial institutions, whether they're microfinance institutions or commercial banks, and actually create the technology that allows them to online to these customers. Because there's two big issues. It's not just that when transactions are in cash and records are in paper, that it's expensive to access and hard to assess the risk of these businesses. But it's also that if you're making a $500, $600 loan, you can't actually do that profitably unless you're using automation and digital technologies. So we've created, using machine learning, a credit risk algorithm that analyzes the Ozai data with other financial data available to predict the credit risk. And so financial institutions are on lending to our customers. And over the last 18 months, these customers have maintained a 0% default rate. So why is this important for women entrepreneurs, women like myself who are out here trying to make business? When we are relying on paper notebooks, when there's no algorithmic way to do the credit assessment, then we rely a lot on heuristics, right? Does the credit officer like you, trust you know your family? Women are often underestimated, especially in the business sense, right? If we look at early stage venture capital as a proxy, women only get 2% of funds. And this is when there's no good data, that's the decision that investors make. So we can see that same biases play out when we're looking at credit for a small business that doesn't have a thick file, so a thin file customer. The second thing is, if you don't have records, you need collateral. And women are less likely than men to actually have a collateral to back up their loan. So women, who are the majority of the business owners in Ghana, actually don't have access to the capital that they need to grow. And so we're choking off the entire economy.
Perfect time. I don't know if you had your timer on, but perfect. Thank you very much. Let's move on to the next section of the discussion, which is really focused on understanding more about what you have found. So Kwaku, you started talking about this during your 3-minute introduction, but we'll give you more opportunity now. So let's start with Kwaku. One of the things that we wanted to learn more about was what surprised you when delivering those services that you did to women, right? You talked about there's been an overwhelming positive response from women using this IVR service. Was there a result or an issue that maybe you hadn't anticipated? And how did you resolve it? And how did it impact your business decisions? Because I think one of the things that we talked about when we were preparing for this session was really understanding, taking an iterative approach to building products for women is very important, because there'll be barriers that come up that we don't expect along the way. And so I wonder if you can share a little bit about the results and some of the journey along the way. And again, I'll time you for 3 minutes. Thank you.
Okay, thank you very much, Nandini, again. So as I mentioned, yes, the results came out very good, but I would like to spend just the next few minutes talk about what really did surprise as we rolled out the program. So we were of the opinion that this was, the best thing that we could actually use, especially in the time of COVID, to help the women, especially because we were actually offering this in a local dialect. I mean, something that was much more suited to the women, something that, I mean, even the less literate people could actually understand. But as we started rolling out, initially with a weekly rollout of messaging, we got feedback from the women mainly that the frequency of messaging probably was just too much. So we had to go back to the drawing board, actually not to overburden them with so many or so much messaging and actually leading to client fatigue in the messaging that we were offering them. We sat back and actually reversed to a bi-weekly sort of messaging. Also, we had a number of operational issues. Initially, we had set a timing of messaging to go between 8 o'clock in the morning to up to 6 p.m. in the evening. We realized that that also posed a little bit of a challenge because obviously some women would be probably preparing dinner for their families around, let's say, between 4 p.m. or 6 p.m., something that was very peculiar to the women. Again, we had to go back to the drawing board to adjust, actually sort out to see how best we could actually send out the messaging to meet the best timing to achieve the purpose for which the messaging was also being delivered. Again, another key thing that did come up as we rolled out was that we did realize that in order for us to achieve the high win uptake and high client satisfaction, we had to roll out digital gradually, make sure that the interface is designed enough to actually suit the best women. Again, performance of the digital and platform was also key, making sure that it was stable and performing and it's appropriate for the set service that were required for its use. So some of these were the things that did come up, but the institution sat down as we did roll out over the period to actually go back to the drawing board and make sure that these are reversed, these are actually reviewed, and were put in place to ensure that the design met the correct needs of the women.
I really appreciate that insight. I think timing makes such a big difference, especially for women. I think across the world, often you have these times where they're very busy in the morning, getting their whole household ready. I know I feel that way too sometimes. So I really appreciate hearing how that design evolved. Maybe over to you, Sakshi, for providing your perspective on a different set of questions we had, specifically on how you can maybe provide quantitative or, if needed, qualitative evidence about how the digital solution of iFarmer, because I know that was what our focus was today, although the Women's Recovery Fund has supported many entrepreneurs, and how have they really allowed them to access, how have they allowed women entrepreneurs to really access financial services without collateral? Maybe you can speak to that. And again, I'll time you for 3 minutes. Thank you.
Thank you so much, Nandini, and I'll try to stick to time this time. Thank you. No, from our side, I think when we started working with iFarmer, the problem statement that we started really was that there were certain sections or certain parts in the country, while this is a generic problem, wherein access to finance for women was the first problem I think that we started to solve, was a challenge. So if a certain bank or a financial institution has, let's say, about 100 Bangladeshi taka dollars available, and it's available for any household to sort of access and to use for business needs, it's obviously about 80 to 90% of that goes to male member of the household, a lot more experience, better understanding of the business. And I think, as my colleague Megan was also referring to, the heuristics part of things, the general impression or that male would be able to run a business, has been doing it. So I think our intention was to purely focus on women, make sure that we are able to build some sort of a credit, I won't really call or use the word credit history, but some sort of data backing, so that they are able to formally access financial services, and then add on more solutions to it. So just by giving example, how it started was, we reached out to women in certain sections in Bangladesh through iFarmer, provided them small size financial access, and this money was actually coming from iFarmer's sponsorship, wherein retail investors can, provide sponsorship, as I was talking about before. And that money could then be channeled to, let's say, one of these women who has no experience of, doing entrepreneurial or business activities in the past. And we started with cattle farming. So now the women has been provided one cattle. We also provided them training support through field staff, through agent who would go there and tell them how to manage it, how to really take care of the cattle, what's needed, what the activities should look like, because that information we felt was also lacking. So that was helping women build confidence. We didn't just leave you with an asset and said that do it on your own. I think iFarmer was there to handhold them and trail them. And in the right time, when the cattle was able to sort of grow a certain size, there was business opportunity to sell it off in the market. iFarmer again provided those linkages to then sell it in the market, and whatever profit was made in this process, a part of it was obviously taken by the women who managed it. A small portion goes to iFarmer as a fee to be able to providing you all these services, and some of it also goes to the sponsorship provider, the retail investor in the iFarmer platform. So in a way, creating business proposition for all, and it worked. I know I have limited time here, but I do want to highlight that in this process, while we started with cattle farming, and we had our lessons, sustaining this business model in COVID was a challenge. Suddenly everything changed, but good that we were also working them to have their own applications, so they were able to sort of quickly move or adopt to the digital aspect. But in total, supporting on cattle farming, supporting on vegetable farming, in fact we also supported with fisheries, providing alternatives. And in some situations when women were doing really well with one cattle, sorry, we also helped them establish banking linkage to manage an entire farm of cattle. So we've been able to directly impact about 9,000 farmers, of which about 45 to 47% are women. And through this platform, these people have been able to raise about 1.5 million. And I'll park it there. Nandini, over to you. Thank you.
Perfect timing. Thank you so much, Sakshi. We have a wonderful question from the audience. A good old friend of mine, Hillary Miller-Wise. Nice to see you. And William Dibrin, kind of asking similar questions around, as ladies and gentlemen, panelists, as you're answering the question, if you can integrate into the DNA of the question, what exactly are the elements of the business models that are helping to close the gender gap? I think that'll be helpful, right? And Sakshi, I'll give you an opportunity to come back and talk about that in a few minutes as well. And you as well, Kwaku. So let me take this opportunity and maybe ask Megan to speak next. Megan, I know you also have some very interesting quantitative data around some of these pieces. And then again, if you can weave in the answer to Hillary and William's question as well, which I know you will very well, please do. And again, I'll start the timer for 3 minutes.
Sure. So, I mean, as a company whose tagline is data-driven growth, we are always looking at the data to see how we're affecting our business owners. So I know everyone is always interested about lending. What are the returns on lending? How does the lending portfolio work? Are the women accessing credit? But I would take a step back and say the best money to invest in your business is the money from your customers. And so what's really exciting is that we can actually see that customer money, that profit invested back in the business through OZE and leading to business growth. So I think about one entrepreneur who I was just chatting with the other night, who started on OZE 3 years ago. In 2019 to 2020, she doubled her revenue. And from the following year, 2020 into 2021, by middle of the year, she had already beat her 2021 figures. And she was just chatting with me the other night because she went from Ghana to also selling in Lagos to now selling across Nigeria. So the organic business growth is so important. If we do then look at the data from our loan applications, we see roughly equal proportions of men and women applying for loans. So women are about a third of the users on our platform, and they apply for about a third of the loans that applications we receive. But women are more likely to be qualified than the men. So although they only account for 30% of applications, they account for 38% of borrowers. So a small uptick there. But what's really interesting is that 38% of borrowers account for 55% of the capital distributed. So the women that are able to access our platform, and I have to say are able to because the biggest thing we have to deal with on the digital gender gap is women having access to smartphones, women having digital literacy. But those who are able to use our platform tend to have more access to capital than men that come through our platform. And from a business model perspective, women actually account for 2/3 of our repeat borrowers. And repeat borrowers are business model gold for us because we already have some information on them about how they repay. Are they a late repayer? Are they very diligent? Did they continue to use the app actively through the loan repayment period? So that's really exciting. In terms of the credit model itself, although gender isn't like a one, because there's so many variables, women tend to be less risky. So what that should mean over time as we generate more data is we should be able to offer different interest rates to women, different interest rates to repeat borrowers who are often women, and therefore the cost of capital that should reduce for these women entrepreneurs who are, based on our data, more likely to put it to work in a way that turns into profits. So if I think just one example of a woman who's a repeat borrower, she lives in central Ghana in Kumasi in the Ashanti region. She took a small loan, about $500 about a year ago, for her business making leather sandals. Just the other week, she qualified for a nearly $2,000 loan because that $500 changed her cash flow so significantly that her now business can afford more capital and grow at a faster rate. And that's what we really see across the women in our portfolio.
Thank you, Megan. I think, in answering Hillary and William's question in a precise way is also, one is just the basic, okay, they're increasing their access to capital, which can catalyze growth in a way that they don't have before. And that is helping to close the gap, right? Because they're getting access to capital that they didn't have before. But then you're talking on second level stuff, right? You're saying, okay, based on some of this data that you're saying 30% of applicants, 38% of the borrowers, 55% of the capital lend, maybe we should be lending more to women. Maybe we should be lending more to women at a lower rate. That's significant statements you're saying there that can actually really lead to accelerated closing of the SME ownership gender gap. So that's really interesting. Thank you. Lastly, Vijay, I'm very happy to ask you to speak to your experiences and specifically, what did you find when you were trying to increase the number of women agents, when you were doing some of your work to try to increase women's access to capital? What were your lessons learned? What surprised you? And then how did you change your business model to address those surprises?
Sure. Like I said earlier, of the total agent as part of the C-Dot network, now from almost 0 to 35% being women, led to a change of these women having 55% as their customer as women. Now, that is the first level of what I call as physical access. The physical access was made possible. Now, the second access point is the digital access. Of course, technology play a role. And in the case of what Sakshi was talking and Megan was talking, these are mostly closed loop project. Why I'm using that word is that these are projects where you have created ideal conditions in which you have collected data and then try to connect those data into a financial system. But the kind of challenge in which we are working with a mainstream banking system. The mainstream banking system doesn't capture all the data that we are able to capture in both Sakshi's and Megan's projects. But so what do we do? That's probably the most important question. So what we are trying here at one level is to increase financial literacy of the customer and digital literacy of the customer to be more comfortable in doing digital transaction. That is point number one. And second, at the same time, what we are trying to build is an ecosystem of services that can be built on the data of transaction that is being done. Now, these transactions data are very minimal. These are savings and withdrawal transactions, nothing more than that, right? Now, on basis of these two transactions that is there and the customer profile over a period of time in a banking system, what kind of decision making can you bring in? And that's where the challenge comes. Now, if since our original question was, how do fintech answer these questions? So what I'm trying to kind of lead on the whole panel into our the core point of our discussion was that how do we make, because fintechs are disruptive, very very disruptive. They working with banking, the same banking system, and delivering a new front end for services and much a faster rate. But the problem is, can the legacy system which had used digital to a certain level keep learning from all our group's experience and then feed into this fintech uh, disruption that is happening? I think that is where we need to understand that how to mainstream the data points that Sakshi has, the Megan has, or Kwaku has, that how do we mainstream those data points into a financial system so that a customer is able to access that service and gender gap doesn't widen.
Thank you, Vijay. It's such an important point, and maybe it's an unanswered insight, right? Like it's not something we've been able to figure out yet. But what I really like is sort of this connection between what everybody said, Kwaku, Megan, talking about the heuristics of lending that often people kind of default to when it's paper based, et cetera, et cetera. And then how do you leverage the insights you've gained, that all of the speakers have gained through their the data that they have in the back end? How do you connect that to a formal system that's not ready for it yet, maybe? And there isn't a API that plugs these insights into a formal banking or financial system that allows you to make up for those perceived risks, right? So that's a really, really important and interesting insight, Vijay. Thank you for sharing with us. We have lots of questions. I promise our wonderful listeners that we will get to all of the questions. We have a 15 to 20 minutes dedicated for Q&A with our colleagues here in this webinar. So I promise I am reading all of your questions, and as soon as we can start answering them, we will. What I'd like to move on to is the next discussion session, and this one's going to be interesting because it's a bit of a discussion between the panelists. So we beforehand asked all of the panelists to share their pitches, and then all of them kind of had some interesting questions for each other. So we've paired them a bit to have a very fast. I'm going to give you 1 minute each to ask the question and answer the question in pairings, and then we're going to jump into audience questions. Great questions are coming out on the screen. Very excited about them. Please ignore my daughter screaming in the background. I am working from home. So first off, let me invite Kwaku to ask his question to Megan. Go ahead.
All right, Megan. So I am a little interested to know more about the how you've been able to actually deal with the digital literacy gaps that exist, mainly, especially in Ghana, mainly, especially among the women, female customers. Of course, both financial literacy, digital literacy, how you've been able to actually go around that to offer this wonderful service to the women.
Sure, it's a great question, and I really wish we could do more. But as a private company that has to actually make a profit and grow, we can't serve every customer, right? Businesses need to specialize and choose a customer segment. So we have some base criteria to use OZA. You have to be literate in French or English, and you have to have access to a smartphone. That being said, not everybody who has access to a smartphone is digitally literate or financially literate. We focus a lot on financial literacy, like I mentioned, through the OZE coach. So we're providing financial education directly through our app each and every day. On the digital literacy side, we're not just your normal Play Store app where you download it and you never talk to someone again. You've probably never talked to someone from WhatsApp. We actually have a team we call the A team that's calling each and every user and actually walking them through. And we do training where the trainers speak in Twi and explain in local language how you use the app. So if you can type small in English, but you learn better in Twi, we have that option for our customers as well.
Super.
Wonderful.
So I asked my question.
Yes, perfect timing as well. Thank you. So let me ask Vijay to maybe ask his question to Sakshi. And again, we have 1 minute each. Go ahead.
Sakshi, to loan to a farmer, and since you mentioned women farmers, and in the subcontinent we have the situation where women farmers do not have land titles under them, so collateral doesn't exist. So we have to work without collateral. That's one. Now, what are the determining factors and data that can be leveraged by a fintech or any financial service provider for that matter to determine what how and what kind of services can be financial products can be offered, how to tailor make the product for the right farmer. And I'm asking this from a point because we as an organization have been rolling out financial services to farmers already. So we use a particular methodology. I would like to learn what you're doing.
No, that's a great question, Vijay. Thank you so much. And I think in a way that links to the last point that you were trying to make as well. Of how do existing banks or the formal financial channel, the big giants, sort of learn and pick up these closed loop solutions as you were referring to. Now, this is great. No, I think just going back to the work that we're doing with farmers, and I did highlight a bit before that. While we started working with women with only cattle farming as a potential solution, mostly only one cattle to start with for them, but I think as the process evolved, obviously there were many women who came back and said, a smaller portion who said this is not possible, or this is a lot of effort, or I don't want to do this, because as they were new customers to us, they were first time to get some sort of financial access. At the same time, it was new to them as well. They were also learning the tricks of the game, but there were many of them who sort of graduated enough, and were capable enough to actually run a cattle farm. A few of them came in the process and understood, okay, cattle farming maybe is not my cup of tea, but I see vegetable farming happening on the side, and I have this patch of land available, or I can support my husband with this, so let me pick that up. A few diversified to fisheries. So I think the kind of capital that organization, especially in this situation with iFarmer, the kind of capital, the grant solution that organizations such as UNCDF can come in and provide. And these businesses, I think, as Megan was saying, businesses are here to make money. They have to be sustainable. But I think the capital from organizations such as UNCDF or other donors who come in, and how solutions could be tested. So in this process of this pilot, what we've learned is that for most of the situation, the crowdfunding amount which was provided to a single farmer was actually returned back. Noted. Was returned back. So the losses or the number of defaults essentially were very minimal, not to the segment that we would even highlight, very small. So I think this lesson, and we've already gone to a few bank partners, by the way, in Bangladesh, and iFarmer has been able to establish linkages with two bank partners who want to now leverage this data, and actually run some sort of DI analytics to see how formal solutions can be offered through it. So I think it's a try and test approach. Pilots like this are needed, and I'm not sure if this is the answer, Vijay, but maybe there is no right answer. Thank you. Over to you,
Thank you,
Nandini.
So let me invite Megan to ask her last question to Kwaku. I recognize that we only have about 10 minutes left in the webinar. We have some great questions coming in. So just wanted to note that to all the panelists, and please take a look at the questions. Go ahead.
Sure. Kwaku, my question is, what do financial institutions look for in fintech partners? And how do you make a decision of we want to do something, try it ourselves, versus we want to partner with a startup to reach more customers more quickly?
Great. Thank you very much. That's a great question. So I think we have gotten to a point where financial institutions actually have to collaborate with fintechs, or probably phase out, because I think with the level of digitization that is going on around us, it is very important to actually collaborate with a fintech who have the expertise actually to help to actually double your steps, as I would usually want to say it. So some of the key things that a financial institution usually will look to actually partner with a fintech is more of how credible the fintech is. We look at some of the key things that the fintech can actually offer the financial institution. Mainly, is there a mission alignment? Sometimes you realize that you probably might go into a certain partnership with a fintech which has probably a different mission altogether with what you want to achieve. In such instances, there are bound to be some frictions on the way. So the key things: mission alignment, how we can actually make sure that we can collaborate effectively to ensure to the ultimate good of the customer.
Wonderful, thank you. So we have some great questions. We have about 8 minutes. I think we might be able to cover them. Maybe what I will do is I will ask the questions, and then there's one, Megan, specifically for you. And then I think the others can be answered by not everyone, but you can choose to answer it if you want to. So one of the questions from Ida Dokla is, how do you measure the impact that these business models have on female customers? And we've heard a little bit about it, right? Megan, you shared quantitative data. Kwako, you've shared some. Sakshi as well. So obviously you're doing some measurement. Its impact on women customers, their livelihoods, their lives. If you want to just speak a little bit to that, that would be great. The particular question, Megan, for you is, I'm curious if you have spoken to your repeat customers, repeat borrowers, to identify their reasons for loyalty. And maybe you can speak a bit to how their choices expanded and how, if they still chose to continue with OZE, what kind of experience did you provide to trigger that choice? Very human-centered design question. I really like how specific it is. Another good friend, Rati Manikant, good to see her in the audience as well. She is making the very good point, and I think we talk about this kind of implicitly in this panel, which I really like. Fintechs range in size and scale, right? We have super tiny fintechs. We have super large fintechs that are very well established. We have Opportunity International, which is kind of a bank, but also partners with many other kinds of institutions who already have lower margins, right, than when they're a smaller fintech. How do we help them invest more to actually be more inclusive to women, serving women as a segment sustainably? Sakshi, you said everybody's got to make money, right? And profitably without significant support. Right? This is a big question in our field for implementers in our field. We provide a lot of support to a variety of sizes. Is there going to be some point where we're able to find that business model that doesn't require so much time and money, that still allows a business model to be more inclusive, especially to marginalized segments? So anyways, to read the question out loud, they are still harder to reach segment, women, having fewer assets, having less money and less data flowing through digital currency and channels. Smaller fintechs will feel the need to first serve mass market in order to have some uptake, right? And Megan, you mentioned OZE is not just for women, it's for men and women, right? And I think that's really important. I think, Kwaku, you also mentioned your business serves both men and women. It just happens to address some of the challenges for women even more. One last question from Jayashree. Oh, we've lost Sakshi. I hope she comes back. Adding on to Rati's question. So what kind of support could have been provided maybe at an early stage? Is it TA? Is it innovative capital structuring or in investor incentives that would really make a big difference there? So there's a lot to unpack there. We don't have a ton of time. We also are being told by our moderator that the poll has can reopen on whether fintech will increase or decrease the technology gap, so the gender gap. So please feel free to vote there as well as we're having this discussion. And our colleagues from CFI said that the comment chat will be open, so we can contribute to it even after this session is done. So maybe I will invite each speaker to kind of just speak concisely, if you can, to the elements that you think you can answer in some of these brilliant questions. Thank you very much for our audience members for the brilliant questions. Megan, may I ask you to start first?
Sure. So to address the one that was specifically about OZE, yes, we do talk to our repeat customers. I think what makes OZE an interesting embedded finance solution is that it's not just once a month where you're repaying the loan that you're interacting with OZE. It's your business operating system. You're recording your sales, you're recording your expenses. And so when you need access to finance, that loan is just a click away. We offer lower interest rates than microfinances, no collateral, and you can do it from your smartphone. So once you've kind of felt comfortable doing that, you do come back. And the more you borrow and repay correctly, it tends to be the more that you can borrow. And so there is some benefit for staying with OZE as your lending provider. The other thing I would say about how we can reach these harder to reach places, I'm on this panel because we're working with UNCDF in Ghana in partnership with one of the large banks, Ekgaon. We have to think about, as a business, the cost to acquire a customer and how much they pay back. And it does cost us more to go find a rural woman, train her, onboard her, support her. So from a pure business standpoint, it does make sense to go after that university grad and crowd. But someone like UNCDF comes in and they subsidize our cost of customer acquisition, changing the math completely, so that customer can actually end up in the long run bringing profit into OZE. And so that's, I think, a really interesting way that you can help fintechs extend their services into more marginalized populations.
Wonderful, thank you, and it answers several questions in different ways, so thank you. Vijay, maybe I'll ask you to speak next.
Thanks, Nandini. I think what Megan has just said, that cost of acquisition of a customer is the moot point, right? So, and when we talk about fintechs, why fintechs are disrupted? They're disrupted because they have leveraged technology to a very supreme level of efficiency using AI engines, algorithms, and data sets to understand a customer and meet their specific need of credit and access to finances. Now, that is something which is the moot point here. Now, the point is that for the women who are digitally excluded, who don't have access to a smartphone, or who don't have access to a formal or sustained access to a phone, a phone is shared between the family members. Then how do we create those data points, or what are those data points that can be accumulated to build what many people use credit score facility need to assess the credit profile of a customer. We need to build up a profile of a person. Otherwise, the same fintech which uses data and which doesn't have dedication as Sakshi and Megan's projects have, or what Sinapi has, or what we are doing, then the exclusion will happen immediately, because you are not relying on any human touch, you are relying on artificial intelligence. So I think the most important question we have is that where and how to generate those data banks that connects the ecosystem that both Megan has just spoken about and Sakshi has. And in my opinion, what we have done is that we need to mainstream as much as possible and build those data points for the bankers, for them to have greater access.
Vijay comes back to his main theme on like connecting these data points, and that maybe also being catalytic, as well as some of the capital points that Megan mentioned. So thank you. Kwaku, maybe I'll ask you to go next. I know we're at time. I think we said we may have 2 more minutes. So Kwaku, I'll ask you to take a minute, and Sakshi, you can wrap us up. Some of the questions are in the chat that you can also quickly review. Please go ahead, Kwaku.
Sure. Let me speak a little bit on the elements. So yes, so I see Hillary mentioned that we should focus a lot more on other key elements, but I think deep down that there is no key element rather than making sure that whatever product that you are bringing out or whatever model it is that you are designing meets the correct need of the woman. Because essentially, if you don't meet the need of the woman, I think the product has failed right from the beginning. The key thing that we are trying to do to bridge this gender gap is to create access, making sure that women have access to these whatever it is, whatever fintech solution, whatever model that you are giving it out to them, be it lending, be it access to savings or whatever it is. So yes, it is prime one to look at the design, the how innovative it is to ensure that it's good enough to attract the woman to use it. It is very important to look at, for instance, in my context here in Sub-Saharan Africa, where there aren't a number of the women actually using smartphones, going out there to provide a solution, possibly on a smartphone, might probably have a challenge right from the beginning. It is very important to look at how are the women actually using their phones for? Is it only text and phone? Are they using for other applications? Very crucial to look at these things, the key essence of why you want to actually offer this particular solution. The need, making sure that the design actually does meet the need. Thank you very much, Nandini.
Thank you. So important to always come back to what are the barriers and what's behind the barriers. Thank you so much for making sure that we're based there. Sakshi, would you like to wrap us up with your feedback on the questions? Then I'll give just 30 seconds of final remarks. You're on mute, Sakshi.
Oh, great. Sorry. Thank you so much, Nandini. I think when you were calling me out, I got disconnected, but I'm glad to be back again. Thank you, everybody. Now, I sort of just want to establish some linkages between, different responses everybody has given. So there was this question from Rati Manikant around, small size fintechs. How do they how do they target women? And I think a part of that was something Megan and Vijay have already responded to. But I just wanted to highlight data points both of them shared. When Vijay highlighted that with CDOT, they have so many women agents, and those women agents have been able to attract, I think, 55 plus women customers. Or when Megan says that, in terms of the return rates, women have been a lot more responsive, and their data shows that maybe they are better customers. And I know she shared some figures as well. So I think it's really not about having that one investor or that set of innovators who are looking to invest in women. It's really about demonstrating through data. And I'm glad which organizations and like ours or pilots are doing already that sustainability does exist in serving women. And when we are able to demonstrate that even in a lot smaller scale, I think banks and others do get excited, and at least that's the kind of traction that we are seeing with our partners in Bangladesh, and I hope it sort of continues. Yeah, that's all. Thank you.
Thank you, Sakshi. Thank you to all of the panelists. I have learned so much. So I think our audience has. I've received a few notes already saying what a good and lovely and lively discussion this has been. On behalf of Opportunity International and UN Capital Development Fund, it is our pleasure to have helped moderate and bring this discussion to all of you in this important week of Financial Inclusion Week. Thank you so much. And I'm told that we can continue the discussion. This discussion and this video will be live and available for the full week. So please continue to put in your questions, and our panelists will continue to look at those and give their responses. And if you see connections you want to make to any of our panelists here, please go ahead and make them. With that, thank you so much, and have a wonderful day or evening wherever you are. Bye.